Hello, I'm Dale Leftwich with RealAgriculture. Today I'm with Marlene Boersch, and she is with Mercantile Consulting. How are you doing today, Marlene?
I'm excellent. Thank you very much.
Great, Marlene. You just gave a presentation here at CrossFair on the prospects for wheat. You covered off several different aspects. Would you just like to talk a little bit about how you see supply shaping up as we get into the season?
Well, we're well into the season, and I think the feature of this year's wheat market was that some of the major exporters actually had reduced supply, and most notably Russia's steep upward trend has been interrupted. They had a reduced crop this year. The same is true for Australia, which matters into Asia. And so the export volumes by the major shippers changed a little bit. Canada has been doing well this year. Early in the fall, we were up to 20% ahead of last year's shipments. And I think now, as of last week's CGC numbers, we're still 15% of last year's volume performance. And I think that's very, very positive. We have been anticipating, actually, that Russia will have to slow down because of the reduced production volume. And I've had to be a little bit patient because, they have been pushing the volume into December and actually, in fact, into last week's tender into Egypt. They are running very, very tight domestically now on wheat. But I think they have keep pushing volumes because of reduced oil revenue, so they were keen on the foreign exchange. But I think for January, we'll probably only see a 1.5 million ton monthly export number for wheat out of Russia versus at the peak this fall, they were close to 5 million tons on a monthly volume. And that will help North American shippers from the US and from Canada actually to compete into some of the markets in the Middle East, into Southeast Asia, and so on. So I think in the next 12 we'll see, hopefully, even more increased export volumes materialize for Canada.
So Australia had a drought, and Russia, their position, the Black Sea area generally has really increased supplies over the last several years. As you say, it's been a trend. And this year, with the lower price of oil, those exports of things like wheat really bring in a lot of foreign exchange money. So they continue to push their exports in those commodities where they can.
Well, they've been pushing wheat exports for years. Last year, they became the world's the single largest wheat exporter, and they will maintain that position. But at the same time, because the production volume was simply reduced because of weather influences, they can't keep up the pace they said earlier in the year. I think they have continued pushing the pace a little bit because, for other considerations like foreign exchange, but that doesn't take away from the fact that they can't, simply volume-wise, they will not be able to keep it up.
So then if we take a look at demand then, switching from supply, how do we see demand shaping up for wheat this year?
Well, demand is up a little bit from last year, but it's more constant than the supply picture we have seen. What has changed is who ships what to whom, because of the changes in supply. We have seen very good demand from Indonesia, for example. That's our single biggest buyer right now. And as I said, we've been able to increase our shipments by 15% year to date. So demand wheat demand actually, when you look at it longer term, as I showed in the presentation, has increased very significantly. If you take a longer time horizon, I think I had a graph from 91 forward to now, and you can see that, the wheat demand has also increased. The trick will be for Canada to maintain the market share, which over the last number of years has actually fallen, from about 17% in the 90s to about 12.5% right now. Because of increased competitions of the likes of Russia, Kazakhstan, Ukraine, and so on. But again, specifically with Russian production down, we are aiming to carve a slightly bigger piece of the pie this year.
So as farmers are looking to market last year's grain, what kind of market signals and what kind of things should they be looking for in terms of making their decisions on marketing last year's crop?
What we have seen all year is that deferred prices actually were rewarded, beyond what the carrying charge actually is, and that's because people had anticipated a higher push of North American grain, post November, but it's going into January. That is still there. There have been some specials recently for Feb-March, significantly over the $7 levels at $7.35 and so on. I think these, relative to the world markets, these are decent prices. I think if farmers see prices above the 7.25 level, because we are getting close to some new crop considerations by European countries, within the next 6 weeks to 2 months, those will come to fruition, then they should probably look at those levels.
And also, this is that time of year where you're looking at marketing last year's crop, and you're also looking at marketing some of next year's crop. So what kind of things should people be looking for in terms of early delivery for next year?
Well, in my cost of production comparisons for next year, and by the way, we anticipate spring wheat acreage to increase by a few percentage points, and durum should fall by probably 10%. Prices translated into about $7 a bushel. That's what we're using for cost of production comparisons for wheat right now, both for wheat and durum. Again, if you see anything substantially about the $7 bushel level, you might want to hedge some of the new crop wheat for next year already as well. But it's a little bit early to really, it's not too early, but it's difficult this year to know what the acres are in the United States because of some of the political interference there. What exactly is going to happen to the soybean picture? What are these acres going to do, and what will it do to wheat acres? All of that will come into play, and that's why you might want to hedge a little bit at prices well above the $7 bushel level for next year.
Very good. I just want to thank Marlene Boersch for being with us today. Marlene Boersch of Mercantile Consulting. Have a good day, Marlene.
Thanks very much.